Bloomberg is now on your dashboard. With Apple CarPlay and Android Auto, it gives you access to every Bloomberg podcast, live audio feeds from Bloomberg Radio, print stories from Bloomberg News in audio form, and the latest headlines at the click of a button with Bloomberg News Now. It's free with the latest version of the Bloomberg Business app. That's the Bloomberg Business app. Get it on your phone in the Apple App Store or on Google Play. Just download the app, connect your phone to your car, and get started. And it's all presented by our sponsor, Interactive Brokers.
Welcome to the Bloomberg Markets Podcast. I'm Paul Sweeney, alongside my co-host, Matt Miller.
Every business day, we bring you interviews from CEOs, market pros, and Bloomberg experts, along with essential market-moving news.
Find the Bloomberg Markets Podcast on Apple Podcasts or wherever you listen to podcasts and at Bloomberg.com/podcast.
All right, he's back, folks. He said he'd be back, and he's back. Brad Jacobs, Executive Chairman of XPO. You know it and love it on the New York Stock Exchange, XPO. He's got a new company, which he's been talking. I guess he kind of hinted at the last time he was here. Teased. Thank you very much. Brad, thanks so much for joining us. We really appreciate you coming back. Talk to us about the new opportunity you've seen. I mean, you've done roll-ups of the waste management business, the rental business, the logistics business. Now what?
Building products distribution.
Building products distribution. Okay.
So if you could think about any house or a commercial facility or a hospital or a school or a church, all the stuff that goes into making that building. So that could be the roof, the flooring, the windows, the tiles, the doors, the fire hydrant, the infrastructure, the pipes, HVAC. All that stuff has to go through the supply chain. And it's huge, huge markets, $800 billion in size between here and Western Europe. And it's been growing about 7%.
All right. So
what do you bring to it that's new?
We'll bring a lot that's new. First of all, we're going to create a very large company and get all the advantages of scale and size that come with that. Second of all, we're going to apply technology. We're going to apply technology, especially AI, for dynamic pricing, for managing the warehouses better, making them more automated, to do route optimization for the delivery trucks, to do interactions with the customer. E-commerce right now is mid-single digits %. It should be the majority.
And in building materials, Paul, all I want is
know.
a straight 2x4.
I know that's.
Can you make that happen? It's a big deal.
You got it.
No, it's a big deal where you source your materials, because even though it's commoditized, I just find as the end user, it's not always the same product.
Well, I'm glad to hear that there's a problem to solve in this chain, and we will solve that.
Talk to us about kind of the. I guess in the past, part of your strategy has been rolling up a fragmented industry.
Right.
Is that in fact the case here? Talk to us about kind of the fragmentation and kind of how you plan to deal with that.
So there's about 13,000 distributors here in the United States. Excuse me, it's 7,000 here in the United States. It's about 13,000 in Europe. So there's 20,000 distributors between here and Western Europe. So it's very, very, very fragmented. The largest company would be Ferguson. It's about $30 billion. Great company, done very, very good, very well. But I plan to make a company even bigger than that.
Boy, how do I invest in this one? I'm not going to miss this one.
Well, as Paul, it's not your first rodeo. What is the experience that you picked up at the other companies with which you were involved, and how does it apply to this?
Well, it's a similar business plan in the sense that it's going to be primarily based on consolidation, acquisitions, so acquiring companies at a relatively good price, a price that's a lower multiple than what we're trading at, and then improving those companies. So if you look at XPO Logistics, for example, we bought 18 companies. They were doing roughly $1 billion in EBITDA between all of them. And after a few years, they were doing over $2 billion of EBITDA. So we improved the companies that we bought. That's the same thing we're going to do here.
Do you become then a friend or enemy or a frenemy of Home Depot or Lowe's?
Home Depot, and to a lesser extent Lowe's, plays in a specific niche of this market, mostly the pro contractor, and they'll be one of many competitors, 20,000 of them to be precise.
Okay.
All right, so I know we were talking to you the last time, management teams, assembling a management team is one of your primary responsibilities, jobs.
The most important thing.
Most important things. Talk to us about how you're going to kind of do that here.
So I wrote a book, as you know.
Yep.
And it's called How to Make a Few $1 Billion. And the key thing, if you read that book, is the quality of the people. Make sure you have people who are really smart, really hardworking, very good at what they do, collaborative, good team members, people who are really sharp and focused. And if you can get that quality of world-class management hired, and if you can create a culture where everyone values the relationships between each other and treats each other with respect and transparency, you can accomplish a real lot. I'm going to have that same exact principle here. That's one of the most important principles for success, in my opinion. And by the way, we named it QXO, Q for quality.
Yep.
We kept the X and O because we're going to use some of the same winning principles that made XPO and GXO and RXO successful.
How far behind is the building supply industry in terms of adapting and using technology?
As an industry as a whole, it's behind. Maybe it's in like the second inning. There are a handful of companies doing pretty well. So last week, Builders First Source had an investor day. I read the transcript and saw it on webcast, heard it on the webcast. I like what they said about what they're doing in technology, but they're the exception, they're the anomaly. Most companies are not using technology in any big way in the warehouses. Most of them are not using technology enough on the route optimization. Most of the building products distributors are not using technology enough for pricing decisions, for pricing optimization. And these are big variables that can enhance the customer experience dramatically and take out lots of unnecessary cost.
Well, does this mean you pass the costs on to the end users?
To the contrary, I hope we save money for the end user because we're going to take out waste, take out inefficiency in the whole supply chain, and we'll share that. We'll share that with the customer. We'll have better margins, but we can share some of that improved margin with the customer.
What kind of revenues are you predicting at this point?
By the end of the first year, we should be on a revenue run rate of at least $1 billion. At the end of the second year, we should be on a revenue run rate of at least $5 billion. Oh. And over the next decade, we expect to get this into the tens of billions of dollars in revenue size.
So where are we with QXO now? Press release comes out today. Where do you start? Where does your capital come from? How do you go from here? How do you build this company?
Well, I was on your show last week, and we talked about how we're putting $1 billion of equity into a very small cap company called Silversun.
That's right.
And we're going to wait till that deal closes in a few months, and then we're going to spin that company back to the original legacy shareholders.
Okay.
We're going to give them a little dividend, $2.5 million. We're going to give them a less than 0.5% share in our new company. Okay. But we'll have our new company, we'll own over 99% of it, and we will use that money to go out and do some acquisitions and start building the business. And over time, we'll tap the capital markets, as we've done over the decades.
How do you typically fund your deals, equity versus debt, given now that the debt is so much more expensive than it was over the last 10, 15 years?
More equity than debt than in the past. In the past, I've been comfortable going up to 2 to 4 times of leverage. Here, I'm thinking more, roughly half of that. And the reasons are twofold. One, as you said, interest rates are higher. Although 20 years ago, interest rates were right here.
Yeah.
It's just recently. It was in the last 10 years they got almost to nothing. Secondly, is the world has a lot of macro issues going on, wars and geopolitical tension, and it's more prudent to have less leverage, in my opinion.
What's your title going to be? What's your role in all this? And are you giving up your other businesses?
I'm certainly not going to give up my other businesses. I'm executive chairman of XPO, and I plan to keep doing that. And I'm non-executive chairman of RXO and of GXO, and I love all three of those companies dearly. And I think I help them in the roles that I play there. In terms of what my title and position is going to be here, it's going to be the same title I've had since I've been 23. I'm going to be chairman and CEO, and I'm going to run the company. I'm going to lead the management team.
And what made you target this industry specifically? You've got about 30 seconds or so left.
I looked at over 500 opportunities in many, many different industries. And this is the one that checked every single box of what I was looking for. Something that was large, something that was acquisition rich, something that was up my alley in terms of my skill set, something where there was growth, 7% organic growth, and an industry and a customer set that is familiar to me. United Rentals has a big overlap with the construction customers, for example.
Fascinating. Brad, thanks so much for joining us again. We appreciate you coming back and bringing us up to date on your new opportunity. Brad Jacobs, he's executive chairman of XPO.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app, or listen on demand wherever you get your podcasts.
The business of sports, John. It's Scarlet Fu and a couple other slugs. I think Michael Barr and some guy who's an emerging markets guy, how he gets it, Damian Sassower.
He does it all.
He does it all. But they talk about the business of sports. I've got a lot of business of sports questions. I'm a golfer. I'm a fan of the game of golf. I'm a fan of the business of the golf. I don't understand what's going on with this LIV Golf thing. I thought the PGA and the LIV were merging. Everybody's going to be happy all together. And then Jon Rahm says he's going to go and take 300 large from LIV Golf. Scarlet Fu, you cover all this for us. Can you tell us what's happening here?
Well, he's the reigning Masters champ, the number 3 player in the world. So he has this legitimacy to going over to LIV, and he's the biggest signing by far yet. And you're right, LIV Golf and PGA Tour are working towards a deal, but nothing's happened yet. They have to give an update by December 31st, and it's not clear what shape this deal will take, although we do know that PGA has been talking with other investors, including a report this morning from Jillian Tan that a Fenway Sports Group-led consortium has been chosen to enter into final talks to be a co-investor, a U.S. co-investor in this LIV Golf PGA Tour entity.
Every one of these sports stories, as of late, the common denominator is money.
Yeah.
And
lots
with
of it.
this specific case, golfers signing with LIV, something in me tells me that this is some sort of Faustian bargain that these golfers are making. Am I being too cynical or
is it a Faustian
not
bargain,
realistic?
If the PGA Tour is in active negotiations with LIV Golf to merge, whatever obstacles they threw up there and whatever concerns they cited has kind of gone by the wayside. They opened the door to golfers negotiating with LIV Golf directly. We know that Jon Rahm had said in the past that he was not interested in the money. He said he and his wife were not concerned about the money that LIV could offer them. He's always been very interested in history and legacy, and he said back in 2022, right now the PGA Tour has that. Now, once it became apparent that the PGA Tour was negotiating with LIV Golf, maybe it doesn't have that history and legacy anymore because it's open season.
It is. I mean, if the PGA is going to merge with LIV, they're going to take a direct investment from the Saudi investment fund. So you've already lost that. The fundamental argument that the PGA had against LIV is now by the wayside because you're in fact taking that money. So now if I'm Jon Rahm, I'm like, why do I wait?
Where the regulators in all this?
The DOJ is looking into this, and again, they have that December 31st deadline with which to update the government. We do know that Jay Monahan and the PIF governor, Yasser Al-Rumayyan, are scheduled to meet this week for negotiations. So maybe there'll be some reporting out of that.
Now, independent of each other, could the PGA possibly survive on its own against an entity like LIV?
I don't know. They don't have bottomless pockets like LIV. LIV is backed by the Saudi government.
But I'll tell you what the PGA has that LIV doesn't have, which is a network television contract.
Yes.
I mean, if you want to watch LIV, you got to go find it on the CW, which are a bunch of hodgepodge stations around. They have no. And so it is. I mean, I'm an avid golf fan. I will watch the second round of some tournament in Poughkeepsie if it's the PGA Tour. I haven't seen one shot of
You could,
LIV.
but you just don't want to.
It's a combination. I don't really care to. The PGA takes care of it for me, and I don't know. So, but there's enough people that are following LIV, I think, that it's a thing, and it doesn't matter what the TV contract is as long as you have, I guess, that Saudi money behind you.
Yeah, well, I mean, they can always disrupt that at some point, and technology is moving in the direction of people are not necessarily going to be signing up for the cable bundles, and signing up for CW streaming will become more and more attractive over time.
All right, so what next for the Saudi government in its investments
I don't know, maybe the Saudi government should look into Shohei Ohtani.
Yes, so now he's
money.
Money. It's all about the Benjamins.
A lot of money in this case.
$700 million?
Over 10 years.
Wow.
This is the largest contract of any in any U.S. professional sports league. It tops Aaron Judge, his contract as a free agent, 9-year, $360 million. Mike Trout, who got an extension, 12-year, $426.5 million. Even Patrick Mahomes, 10-year, $450 million. Lionel Messi, when he re-signed with Barcelona. So this is a, ball. Well, no, I didn't want to use that word.
Well, I mean,
it's a bracket-busting contract. How about that?
It's amazing. I mean, did they? What's the money behind the Dodgers? Like when I think about the Yankees, I think about the Yes Network, and they make a ton of money.
They have a very lucrative sports TV contract, media contract. But this is also the second biggest media market in the nation, right after New York. And on top of that, unlike the Yankees, they've done very, very well on the field. They won the World Series in 2020. They haven't missed a postseason since 2012.
Yeah, that's amazing. That's kind of like the Yankees of the 90s and the early 2000s.
Is he worth it?
Is
Yeah,
he
he's worth it. He's,
Okay, give me some stats. I don't. There's
I don't have the
comparisons.
stats with me, but how about this? He won the MVP twice. He is an incredible hitter, and he's an incredible pitcher. If he just became one a hitter or one a pitcher, he would be an all-star in either case.
I mean,
except that he combines
baseball
both.
people are saying, I mean, he is as good or better than Babe Ruth. That's how far they're going back.
Those are the comparisons. And this summer, when he was playing around the league, everywhere he went, there were fans showing up, and it was like showtime, you know, and there just like tons of fans everywhere. And it was basically a tour to see like how can we appeal to him and show him that like he should come play for the Mets, or he should come play for Detroit, or whatever city you want to mention.
Is there any chance he'll start dating Taylor Swift?
Exactly. Shohei Ohtani in LA.
Travis Kelce is not giving up on his situation at all.
Okay.
All right, what else do you have
just a
for
thought.
the business of sports coming up?
For the business of
Now, you have for our
Yeah.
listeners and our viewers on YouTube, Scarlett is wearing a New York Rangers jacket. So is that the team number one for you?
team number one
Now,
by
you
far.
went to Cornell, so does that mean you're just a diehard hockey fan?
I've always been a hockey fan.
Okay.
And when I went to school, I actually didn't go to any of the games because because it was really hard to get a ticket. You had to
Hard to get a hockey ticket?
you had to sleep outside
No,
in a
this isn't
tent
Duke
to get the
basketball.
ticket. Yeah, I mean, back in the day, this is what it entailed. And
In Ithaca, New
I didn't
York?
do that. Yeah.
Wow.
But then they started playing all the hockey games, or the big game, Red Hot Hockey, in Madison Square Garden on Thanksgiving weekend, and it became a bigger thing.
Okay.
So that's been going on for a couple of years, and I know I came on to talk about that. That's really fun.
That's a fun. All right, so you're a Ranger fan. Unbelievable year so far for the
So
Rangers.
far, but season's early. I mean, season's young, and anything could happen.
Well, who's your team?
Well, I don't know. I mean,
The
kind of
Yankees.
the Rangers. I'm a Yankees guy, Giants.
You're
And
from
that-
New Jersey.
and
You
hockey-
gotta root for your Devils.
Yeah, I took the kids to a lot of Devils games. It's actually a great thing to take kids, but boy, it's expensive.
Yeah, the Devils are very exciting, though.
Yes, they
young
are.
players. They're doing a lot.
Yeah, but I mean, Madison Square Garden. Going to the
Prudential?
Duke Blue Devils next Wednesday at the Garden against Baylor.
Oh,
So that's
nice.
my next time in
That'll
at the
be
Garden.
fun.
Longtime listener writes in Guggenheim money behind the LA Dodgers.
There you
There
go.
you go. That's right.
That's from Mr.
That's
Cinch.
Yep.
Thank
very
Thank
good.
you.
Yep. I remember that deal getting done. All right, Scarlet Fu, thank you so much. We appreciate Scarlet Fu. She's a host of Bloomberg Television and Bloomberg Radio's Business of Sports. Michael Barr, Damian Sassower take a backseat to Scarlet Fu. Let's be honest here.
More like the other way around.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, let's switch gears, go a little bit political. We got President Zelenskiy coming to the States, coming to D.C., meeting with lawmakers to try to unlock some of that aid for Ukraine. Let's bring in Wendy Schiller. She's a professor at Brown University. Wendy, I mean, give us a sense of, in Washington, D.C., where Ukraine fits in with all the other news, whether it's from the Middle East or just the coming election. It seems like the Ukraine and the support of Ukraine has kind of lost a little bit of the limelight here. Where are we?
Yeah, I mean, I think the momentum, I wouldn't say collapsed, but I think the momentum has slowed considerably. And rather than have this sort of a singular conflict that we've been very involved in and very supportive of Ukraine against Russia, now another conflict has opened up that has really soaked up all the attention, all the emotion and passion. And that is, of course, the Middle East, Israeli-Gaza conflict. So that has really become a problem for the Biden administration. And the tendency in the Republican Party, particularly with the ouster of McCarthy and the replacement with someone who's more conservative and more insular in their view about the United States role globally in terms of military conflict and support, that has happened at the same time. And so, that caucus is not particularly persuaded that we should be spending billions of dollars to continue to support Ukraine. And notice that they have not yet, although they want to separate the Israeli aid out, they haven't passed the Israeli aid either.
Let's jump ahead to Election Day, and when a voter walks into the poll and pulls the lever or the switch or whatever it is now. Are they thinking about Ukraine? Are they thinking about funding for Israel?
I think a small group of people, in particular the Israeli-Gaza conflict, a small group relative to the United States voting population, a small group will have intense preferences, and they will remember either favorably or unfavorably what the Biden administration has done, and then they will now listen potentially to Trump or Nikki Haley or Ron DeSantis on what the government should do. So that I don't think those people swing an election nationally, but there are some communities in swing states where they could really make a difference in their voting. Ukraine, I don't think has ever been an issue that is at the forefront or top of mind that swings electoral decision making.
Kind of on that front, Wendy, there's a couple polls out, one from CBS News, one from the Wall Street Journal. Biden's support of Israel alienates more Democrats in the new poll. What kind of calculus is the president, kind of working on here as it relates to his support for Israel?
Well, I think here we really see, as we watch, for the next months, before the U.S. public has had a daily dose of Donald Trump. I mean, we just haven't been exposed to the daily dose yet. If he wins Iowa, as we now sort of expect him to, and if he wins New Hampshire, we are going to get multiple daily doses of Donald Trump. And I think the polls will probably reflect a shift a couple months down the line on that comparison. But right now, the Democrats face a real problem because at the congressional level, they are divided on Israel and Gaza, and that division is obviously very public. So going into the 2024 races, you've got House races, you've got a chance to take the House back, you've got Senate seats you're desperate to preserve, and you've got the Biden reelection all converging, and you don't have consensus within the Democratic Party on each of those levels on what the best policy path forward is. And that's a considerable problem. Donations, endorsements, and again, people who are intense about this, those preferences are going to harden in the next couple of months, and you're not going to be able to shake them once they do.
That daily dose that you're speaking of, is the implication that his supporter, or maybe not the core, but people are going to get a little tired of this?
Well, so this is we look at independent voting, right, especially in swing states, and we say, what has the pattern been? 2018, 2020, 2022, they did not vote for either Trump or Trump-endorsed candidates in big numbers. The Democrats had the advantage among independent voters. Right now, the polling shows that advantage has eroded, not disappeared, but eroded. As he comes back into the limelight and independents are reminded of why they have not voted for Trump or Trump surrogates in the last 3 elections, that's where I think the polling becomes more favorable, if you can put it that way, for Biden in the sense that he has a chance to win those voters back into the Democratic camp, at least at the presidential level.
How do you think this Republican, competitive landscape is going to shake out here? Is it going to be, if and when former President Trump comes back and wins in Iowa and or New Hampshire, as you suggest, everybody will kind of bow out at that point because he will take all the oxygen out of the air?
Yeah, that's a great question. It really depends on South Carolina, obviously. And they've got proportional delegation allocation in the Republican Party and winner take all as you move further down the line in the primary season. So that's how Trump stayed alive in 2016. He didn't do all that well in the early primaries, but he stayed alive and then managed to win many more delegates. So the question is, not only does he soak up all the oxygen per se, but he sets the agenda for the Republican Party. He becomes the symbolic spokesperson for all Republicans running in 2024. And now they're slowly going down to like a 4-seat margin or a 6-seat margin. Their margin has shrunk. And where they won seats, California and New York, are not likely to be as favorable to them in 2024. Presidential election, more voters get out the door on both sides. And if you have a competitive, slightly leaning Democratic district that flipped, that's very tough to maintain. So I think it looks bad for the Republicans on the House side. Also, I'm not sure they can govern. Will we shut the government down in early spring or late winter? Will they pass the debt ceiling or filibuster that? They've got all the same challenges going forward in leadership, and I think it's going to be a very tough landscape. On the other hand, the Democrats are defending 20 seats. The Republicans are defending 10 in the United States Senate. So the odds look very good for the Republicans on the Senate side, and the Senate Republicans have really stayed as far away as they possibly could from the House Republicans. Whether you can do that with Trump at the top of the ticket, that is the big political puzzle, I think, facing the Republican Party going into 2024.
This might be a little out of left field, but is there any doubt that Kamala Harris is the running mate for Joe Biden?
So I have said on Bloomberg that I think Joe Biden is running as long as he's walking, talking, and breathing. I still think he's running. Maybe there's a little bit more doubt there. But Kamala Harris is a big question mark, not from her perspective, but from the Biden team. You know, if you really need a Hail Mary and Biden's still the head of the ticket, do you find a way to have something else for her to do? And she stays vice president until, next year, but find a different candidate to be VP. So the Hail Mary might be Raphael Warnock of Georgia. There is no race of note in Georgia in 2024, and certainly no African-American candidate at the top of the ticket statewide. That's a big difference between 20 and 2022 for the Democrats. So I think Georgia slips away. But if you have Raphael Warnock, who's won statewide twice in Georgia, on the ticket instead of Kamala Harris, I think that changes that ticket's odds. So I think the team will have to get creative. Because right now, it doesn't look like it's a compelling enough team to make sure the same people got out the door in 2020 and make sure they'll get out the door in 2024.
All right, just 30 seconds left. I mean, what kind of campaign do you think President Biden will run?
We used to call it the Rose Garden strategy, where the presidents didn't leave the White House. They said they were too busy. Obama did that in 2012. In 30 seconds, let's see how I can do this. And then he didn't get out the door really until late September, October, when Romney was tied with him in the polls. So I think they're going to do the same thing. I think Biden is not going to travel that much and only get out the door late in the game. And we'll see how he does on the campaign trail versus the quote unquote vitality that we're seeing from Donald Trump right now.
All right, Wendy Schiller, thank you so much. We appreciate it as always. Wendy Schiller, professor at Brown University, kind of giving us kind of the political lay of the land. 2024, John's going to be here in a matter of days, and that's just election year momentum. And the lead that the former president has over his Republican rivals is really astounding at this point. Yeah, it's just extraordinary. So it looks like that will be former President Trump, at least at this stage, looks to be the nominee. We'll see how it plays out over the coming months, and there's some primaries and all that kind of stuff that the politicos like to focus on.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We want to get to our C-suite discussion. Big M&A trade in the airline business, Alaska Airlines and Hawaiian Airlines. Alaska said that it will be buying Hawaiian for $1.9 billion, $18 a share, plus $900 million of Hawaiian's debt. Joining us right now to talk about this transaction, Peter Ingram, the CEO of Hawaiian Airlines, joining us via Zoom from Hawaii. Good for you, my friend. So let's talk about this. Peter, talk to us about this transaction. The market's unsure whether this deal is going to go through. What's the message you're giving to the market today about why this deal should be done?
Well, we feel very good about the deal that was announced. I think it's a good deal for Hawaiian Airlines, Hawaiian Holdings shareholders. It's also positive for Alaska. I think it sets the combined company up very well to compete effectively in a very dynamic airline market. And obviously, we're going to work through the regulatory process over the next 12 to 18 months, but we expect this transaction to close.
I want to pick up on that a little bit because, of course, the Alaska Airlines investors were really spotted that right away, this issue about getting this past the regulators. And this is not an administration that's very friendly to these big mergers. So what's the main point that investors should be thinking about, to put some meat on this idea that the regulatory process will go through okay?
Well, I think the regulators will look at this, as an individual transaction and look at it on its own merits. And what they're going to see is that you've got two airlines that have very complementary networks. We have, big areas of our network where we don't currently compete with Alaska. They also have huge parts of their network where we don't overlap at all. The amount of overlap is very limited, and I think when people look into that and dig into it, that's what they're going to see.
Alaska Airlines, some of their shareholders are skeptical of this transaction, suggesting that Hawaiian will not return to 2019 cash flow levels. We've got Southwest coming into the market. Talk to us about kind of the profitability of your company in today's market.
Well, we feel very good about our standalone business plan. This was a deal that came along and provided us a new alternative, but we were working very aggressively to better our own standalone prospects. Demand remains very strong in our core markets between the U.S. mainland and Hawaii. We've seen good recovery in the Japan part of our business, which is a key piece that had lagged recovery during the pandemic, but really started to come on since May of this past year. We're continue to be the market leader in our neighbor island business, which represents roughly 20% of our revenue pre-pandemic. So as long as we compete effectively, I think there's a good market position for Hawaiian Airlines.
I mean, you mentioned Japan. I'm wondering if you can talk a little bit more about flights coming in from Asia, because with this strong dollar, it might be something that, is putting a bit of pressure on you there.
I think that will hold demand back a little bit. Obviously, when we were pre-pandemic, the yen was trading 105, 110 to the dollar. Now it's in the mid 140s. So that's a considerable amount of inflation that a Japanese visitor looks at when they're coming to Hawaii. But we saw strong recoveries in Australia, from South Korea, and now even Japan has come back over the course of this year, and we think that'll prove to be a steady recovery going into next year. The affinity of the Japanese travelers have for Hawaii is really unparalleled. There were about 1.5 million visitors each year before the pandemic, and it may take a little time to climb back to those levels, but we think demand is going to be very strong over the long term.
Peter, I'm taking a look at your balance sheet, and I see you've got about $1.3 billion of debt maturing in 2026, a big bullet there. What's the plan for that, assuming this transaction does not go through? And how much of your balance sheet kind of brought you to the table to sit down with Alaska Airlines?
Again, we were really confident and remain confident in our standalone plan. We've got considerable fleet assets that are unencumbered. We've got new 787s coming on against which we can borrow, and that $1.2 billion of that maturity in 2026 is represented by a loyalty bond, financing that was raised against our brand and our loyalty program. And so with that coming due, we would have those cash flows to be able to do a financing, and it was under collateralized as it was. So I think the prospects for us continuing to be able to fund the business are very, very strong.
One thing I wanted to ask you a little bit about is your costs, particularly your fuel costs. I mean, regardless of whether or not this deal goes through, this is something that's been plaguing a lot of people in your space. And so can you talk to me a little bit about what your expectations are there and how you're going to manage it?
Well, I don't have a crystal ball on where fuel prices are going, but I do know that if we look back over the last couple of weeks, we've actually seen some relief in the fuel price numbers. And that, as we forecast, we just use a forward curve going forward. So right now, the outlook is a little bit better than it used to be. But, fuel prices are a part of our industry, have been for a very, very long time. For most airlines, it is either the largest cost item or the second largest cost behind salaries and wages. So we will do what we can to conserve. We have a hedging program that helps us smooth out some of the volatility, but we aren't making bets on where the fuel prices go. I don't think that's what our investors want us to be doing.
Peter, as you and Alaska Air execs sit down with the regulators, what are you prepared to do to get this deal approved in terms of maybe routes that may need to be divested, or how flexible can you guys be?
I'm not going to get into any of the specifics on that. And some of that, obviously would be up to the Alaska team to comment on. But the fact of the matter is that these are two networks that are very complementary. There is a very limited amount of overlap. We think the market is incredibly competitive. Lots of airlines serving Hawaii, and we expect it to be very competitive going forward. That's the nature of our business.
Last year, the holiday travel season produced a lot of delays, a lot of difficulties, and then the airline that came under pressure for that was Southwest. How do you feel like the industry is fixed up this year to meet any difficulties in weather patterns? And do you feel like Southwest is still on the back foot here, or is this something you could take advantage of?
Well, I'll just comment on our airline. We're very prepared. We make sure that we schedule within what the capabilities of our fleet and our staffing levels are, and we feel very good about how we're positioned in that regard. Our reliability has been very strong historically, and particularly over the last couple of months as we've recovered from some infrastructure challenges that plagued Honolulu Airport. Earlier in the year, we've been number one in on-time performance with a very low level of cancellations, and we expect to execute well in the months ahead.
Peter, just 30 seconds. Just remind us, what's the timing of this transaction with Alaska Air?
Well, the next step is for us to file a proxy statement and complete our shareholder vote, which we expect to happen in the first quarter of next year. And then after that is really up to the regulatory process and the Department of Justice to review. We'll be working on filing the information with them and responding to whatever requests. We think given the current regulatory environment in the country, it could take 12 to 18 months to complete the entire process, but we think it could also go quicker than that.
Peter, thank you so much for joining us. We really appreciate getting a few minutes of your time. Peter Ingram, he is the CEO of Hawaiian Airlines, recently announced that Alaska Airlines will be acquiring the folks at Hawaiian Airlines. And probably the highlight for Peter Ingram is he is an MBA from Duke University's Fuqua School of Business. This is Bloomberg.
Thanks for listening to the Bloomberg Markets Podcast. You can subscribe and listen to interviews at Apple Podcasts or whatever podcast platform you prefer. I'm Matt Miller. I'm on Twitter at MattMiller1973.
And I'm Paul Sweeney. I'm on Twitter at PT Sweeney. Before the podcast, you can always catch us worldwide at Bloomberg Radio.